we've now got a good idea of what we're looking at, what real estate, who our demographic is and who lives in these places. And I'll get into all the detail, and I'll try to keep it as upbeat and interesting because we got some graphs and charts and all these things. But basically, why do we choose multifamily? Maslow hierarchy of needs, I'm sure we've all heard of those. Fundamentals of human is food and shelter. That dates back to since we began. So food and shelter, we're an evergreen investment. People will never not need housing. As Mike referenced, we've got good stability in economic changes. We've both up and down. The Sharpe ratio, which I won't get too much into the weeds about, but it's a risk-adjusted metric. Multifamily housing has a phenomenal Sharpe ratio, so the risk-adjusted returns are really good. Hedge against inflation, I'll show you that in a bit. Nelson spoke about it yesterday. When inflation happens, prices go up. We've got an asset, our debt doesn't go up. So the value of the property goes up, our debt stays the same and goes down. So we've got increased value. So again, hedge against inflation. And tax advantage returns, we'll talk about that a little bit more as well. But there are really some, I'd like to say, amazing tax benefits to investing in real estate, and the way we structure, these, you have an ownership interest. You are a fractional owner, so you get the benefits of owning real estate while being passively invest. You do not have any active engagements of handling residents, dealing with lawn care, that type of stuff. And forced appreciation. These are, and I'll get into the detail of that, these are real estate businesses. And the way commercial real estate is evaluated is through the profitability of the property. So we'll get into the weeds of that calculation, but in a very short period of time, we can add significant value to the properties, which obviously increases our equity, increases cash flow, and it's really something which we can kind of have a really good control and handle and projection of what that's going to look like. So charts and graphs, here we go. Just again, risk return profile. Obviously that's all of commercial real estate. I'd like to say if it was just multifamily, would probably be a little bit higher and a little bit more to the left, and I'll show you why in a bit. But again, risk-adjusted returns are great. Historically, real estate has fewer down years than stocks and bonds. So we've got a lot more years of positive growth than stocks and bonds. And we're a proven hedge against inflation. 2.5, this is, I forget the years we're running here, 1993 to 2013. 2.5 was inflation. We're at 9 and, just over 9. So we've got a good buffer of how real estate has performed above inflation. So again, the hedge against inflation. 2008, we're going to talk about it because that's what, whenever we talk about real estate, everyone, what about 2008? This was a very interesting chart that shows us the gray line, or the solid line is, that's commercial real estate. So we can see how single family really battled, during that period with foreclosures and delinquencies. So this was actually just delinquencies. There's a little bit of a bump in multifamily or commercial real estate, but really it weathered the storm really, really well. Again, talking about ahead of inflation, these are all real estate classes. The green line is apartments, so multifamily. You can see inflation is the dotted line. We're always just above, inflation, where, some of these other real estate classes have really yo-yoed up and down, where apartments has been in a very narrow band, continuing along or just above inflation. So again, 2008, there was a correction, but it didn't take too long before, we're back up and performing. And over time, it has outperformed the SP 500.